we doing? Oh, doing good. Just getting ready for a little vacation. Gonna talk a little charts and see what happens. Group was real quiet today. I'm wondering if we're gonna have a bit of a low turnout. Sometimes these can be kind of slow midsummer. And if we are, we might do a little pivot to maybe just a Q&A and some charting stuff, but we'll see what happens. Welcome everybody. Shop.
What's up, River?
Rob's, how you doing?
Pretty good, man. Just almost home from work.
Nice. That's always a good feeling. We might actually be onto something here. God, I think it's going to be Shop. He asked me about Shop, but we know we're going to get some old Marvin requests up in here. Alberto. Gladly. Look at that thing, dude. Stoked we were a part of it. That was a fun one. That was a fun one. Those rich guys, dude, they made it pretty obvious. Dude, you want to know one of the craziest things? Did you look at that OI on those contracts for next week and volume? Dude, they didn't close. Like these dudes are up a 1,000+% on all of those, and they didn't close. 1,400 volume over 14,000 OI, 3,000 volume over 20,000 OI, and 1,400 volume over 22,000 OI. They stuck with it. They only got a week left. I mean, I was just shocked that there wasn't some massive roll to a later date, and I went looking, but I mean, people were piled in those 12s like all through the chain, but the fact that those guys didn't close really surprised me. And I haven't seen any.
They see
No.
more upside then, huh? They ain't closing.
Yeah, but dude, they caught 14,000 like on just the 12s. They caught basically 14,000 contracts from 10 to 130 and didn't close them. Like that's just very unbig money, like, you know?
You'd think they'd close some of them.
Yeah, and they did. I mean, somebody closed some yesterday before close, poor saps. And then that happened. Somebody closed some of them before close yesterday, but there was still coming into today between the let's see, the 11.5 and 12 strikes, there was still 56,000 open interest. And they're still in most of them. I mean, of the 56,000 open interest, there was only like 6,000 total volume traded on those contracts today. So they think higher.
Hey, how much do you pay attention to the open interest when like choosing contracts? Do
Not
you
at
use
all.
that really?
No, other than like this trade, in those unique situations where I started watching them build these positions. Like originally, I saw this guy hit the 12s, like 8,000 of them around like $20. Then he showed back up for like 4,000 more at 12, and then he shows up for another 10,000 at 10. And then they closed off some of those. But put the average at about that $10, and I mean, God, those 12s, well, the spread's 125 to 150. So 10 to 135 easily. Like, I mean, they did, 100 and I mean, probably 160 grand to 1.3 million. Like something just insane, and still holding. It does make me wonder if there's going to be some sort of exercise or, some of those companies who were looking at it, BlackRock and Brookfield. It does make me wonder if maybe that was an option position for them to land themselves in some of those shares, be a nice, great way to get a good price on a million shares. Okay, let me make one more post. Okay, and so welcome everybody. Happy to have you here, Dirty River. We are going to, so originally tonight, the plan was to talk about just some less common indicators. And I say that one of them that we're going to talk about, I do think it's very common. It's one I think that you are just fine trading with no indicators, almost always. But if you're going to be a day trader, we're going to talk about one thing today that I do think all day traders should have. Even swing traders, all of that should have on their charts. And then just a couple less common, things that I use or less common EMA combos. But we got pretty low turnout tonight, 17, 20 people, whatever it is. We'll see. And I'm sure people will trickle in. But if you guys want to do that, we'll do that. Since we have a small class, sometimes when there's less people in here, it can be really fun to have a Q&A or just a charting lecture where you guys can ask questions. So I'll kind of leave it up to all of you. If I don't hear anything, we'll just stick with the indicators, but I'll leave it up to all of you. Wheezy, how we doing? Been a while. Been a while. Okay, well, if we aren't getting any questions or any comments, we'll just stick with some more unique indicators. And so first one that we're going to talk about today is an EMA combo. Everybody, I mean, for the most part, everybody has some EMA combo. They like the 20 and the 15 or 9 or 21 or whatever, 9 and 21, whatever it is. Yeah, Scotty, I like that. Maybe we'll just I'll cruise through the basic ones. We'll spend a little more time on the one I really think you should use, the one I love. And we'll try to do a little charting there at the end, and just Q&A questions. But so first, we're going to start with an EMA combo. As I said, everybody basically has an EMA combo that they like. This is one that I really like. I don't use it all the time, and it's it's an old one. Not many people use this combo anymore. But when EMAs were first picking up steam and, people were really starting to use computers to trade, those early mid 90s times, I mean, even in the 80s, but EMAs were, as they become much more accessible, much easier to use. People realized it was easy enough to write the programs to track them, and they became widely available in the 90s. One of the first combos that people used was the 5 and the 13. So before I get into it, I'm just going to do a little description on what EMAs are. And so all an EMA is, there's two types of moving averages that most people use: an EMA or an SMA. SMA, simple moving average. EMA, exponential moving average. So what's the difference? An SMA truly is just a simple average. So you take the close of the candle, you add them together, and you divide by how many there are. It's just truly a basic average. EMAs, much more advanced math, and they actually put a bit more weight on recent price action. So, when we talk an EMA, and we're just going to use the ones I have on my chart for now, orange line is the 20, yellow line is the 50 EMA. Well, what do those numbers mean? A lot of people don't even understand what they're saying when they say the 9 or the 20 EMA or whatever it is. So when you have a 20 EMA, the data is based on the previous 20 candles based on the time frame that you were on. So when we're looking at a 20 EMA on the 5-minute chart, we are looking back 100 minutes, just over an hour and a half. We're looking back 100 minutes, but we're putting more emphasis in the last, we'll say 30 minutes than the stuff that was going on 90 minutes ago. And so that's what we mean when we talk EMAs and we say the 9 EMA or the 50 EMA. And, you start to really see why maybe these move a little bit. The shorter you get, the more volatility you'll see on an EMA with ups and downs. And, what do I mean by shorter? A 20 EMA is looking at a shorter time frame than a 50 EMA. Your 20 EMA on a 5-minute chart showing you 100 minutes. Your 50 EMA is showing you 250 minutes. So it's giving you some averages over the last 4 hours, just over 4 hours. So that's what we're discussing when we say EMAs. So the combo that we're going to talk about is, I call them double shorts. I don't think that's right, but that's just my terminology for it, because I have some others that are longs, but they're longer periods or shorter periods. So the one we're talking today is the 5 and 13. It's double short EMA, two short time frames. 5 EMA, you're only looking back 25 minutes. 13 EMA, you're looking back an hour and 5 minutes. So you aren't looking back very far. And what do we use this kind of EMA for? We try to use it to pick up early switches of trends or identify range trading movement more quickly. And why will we pick it up quicker? Just because of how short these periods are. Most people know when you trade EMAs, obviously when you catch a trend, you can ride that EMA really nice. But a lot of what EMA traders and at least good EMA traders look for are crosses, where one EMA dips below another EMA. Those are the types of things that a good EMA trader likes to look for, because it's oftentimes where you're going to experience that nice amount of volatility. So when I use the 5 and 13 EMA, I almost exclusively use it for scalping. I want to identify a cross, and I want to get in on the first dip to that cross. Obviously, we're only talking EMAs tonight. I am never going to say, okay, 5 EMAs back above the 13 EMA, I'm buying calls, and that is the only reason that I'm going to do it. I always am going to want to line it up with, I should go to SPY, huh? I'm always going to want to line it up with something technical on the chart or something like that. I'm not going to say you can't, but you will have a lot of trouble if all you do if all you do is try to trade EMA crosses. And we have a really great example of why on SPY. Well, this thing's crossing and touching and crossing and bouncing all around. So this is part of that 513 EMA. It picks this thing up in like 15 minutes. It goes sideways, and all of a sudden you start to see EMAs aren't going anywhere. We are consolidating. It's not until you start to see those EMAs spread out that we start going anywhere. And the 5 and 13 is going to pick them up quickly. So another good example on SPY today, when you get these crosses and you are looking for that trend reversal, obviously you had the nice push up early in the morning, you had the trend break, you had the consolidation, you now had the market setting lower highs. So now we really can start to look for this EMA cross to show up. And when it crosses, now this EMA becomes what we ride down to the bottom. Is it always going to be this clean? Absolutely not. But when we've had some signs of reversal of trend showing up, maybe you even have this parabolic wedge over here, then you start pulling down, you start setting lower highs, you can start to look to short this. 513 crosses instantly. When we get our first big breakdown sell, we have our cross confirmation on it. So we can use that as a little bit of additional confirmation. And I don't use these all the time. Yesterday, going to be a really great example of EMAs. Doesn't matter what you're using, 9, 20, 50, none of that. They are, for the most part, useless when you're in a ranging market. You're getting crosses above, you buy that first pullback down to it, you get blown out, you get a cross below, you get the bounce back up to it to try to short, you get blown out, and over and over and over again. So as with all EMAs, these things are rife with fake outs in any sort of ranging market. Well, I love this on the short time frames. You can pick up some really nice scalps. Oftentimes you're going to pick it up very, very early. I mean, even if you kind of go back through these days, you can start to say like, okay, we're staying below, we're trending down, we try to cross above, we just stay below. It's going to identify your trends very well. Well, I didn't really think anybody used this or these combos anymore. And I love them on these short time frames for catching that quick volatility, catching the trend change early. Well, in classic form, Tilio, he uses them on, and we'll just clear this one. In classic Tilio form, he uses them on the daily time frame. Look how well they work. We're doing the same thing, of course, when you're on the daily time frame, now your 5 EMA is actually looking back 5 days. Your 13 EMA actually looking back 13 days. So they identify trends, they pick up these things very quickly, still on the daily time frame. And then I believe Lambos, he trades the 813. It's kind of another short one, I'm not sure if he's in here, but he trades the 813. They pick up the cross quick. And look at these dips. Even when you have, obviously market is up huge, but it's been, we've been grinding here, a couple bucks, every day. Well, look at where all these dips are coming down to, and look at how beautiful of risk reward you have defined with this 513 combo on the daily. I love it. I think it's awesome. So any questions there? Like I said, just pick up, trend changes very quickly and give you a nice thing to know if you should keep grinding the trend. It's going to start pointing up and start pointing down before any other EMA. So everybody get that? Like I said, pretty simple. If you trade EMAs, it's just another little combo to try out. Okay, no questions? Yeah, I can't stand that Ripster, dude. So I would personally never use the Ripster EMA clouds. If you want an EMA cloud, feel free to reach out to me. I don't support that guy as a human. So I personally would not use his things. But if you like EMA clouds, I'm gonna kind of touch on a cloud that I much prefer here in a second. But if you like those, DM me and I can send you a sweet cloud study that you can put on whatever you want, and it will work the same or better than the Ripster ones. Because he tries to say he changed the math on the EMAs, but then people looked at the code and he's lying, so yeah, don't pay for those or anything. Okay, so yeah, Dan, thank you for being here and appreciate the kind words. So next one we're going to talk about, this is an indicator that if you are a day trader, you should have it on your chart. No questions asked. In my opinion, it is one of the most crucial things you can have on any chart. So, Rob's savage. It's VWAP, volume weighted average price. Can you guys see? I always forget what you can see on here when I'm streaming. So VWAP, when you load it, I don't think you're going to see this part of it that pops out. Oh, you do. So when you load, what's going on here? So when you load VWAP, you're going to have lines outside of it. What you want to do is in the settings of VWAP, go in there, click on where it says upper band, click on show plot, get rid of it. Click where it says lower band, click on show plot, get rid of it. So now once you've done that, you're going to have VWAP. It's the color is purple, your pink, whatever this is, this is the standard VWAP color. Well, what is VWAP? It is volume weighted average price. So based on volume, what is the average price that people are trading SPY at? And so why does this benefit us? Because this is a direct look into how big money is positioned. So especially the algos, those intraday trading algos that are the volume of the market. I know people, no matter how many times they tell them, they don't want to believe it. Retail traders just don't matter. We don't move the market. We don't have enough money. We don't have enough influence. Algos at hedge funds and market makers are what moves the market. So what does VWAP show us? VWAP shows us, based on volume, what is their average price on shares. So it's not exactly this cut and dry, but you have to think of it this way. If we are trading above VWAP based on volume, algos are long and algos want the thing to go up because based on their volume, they're in the green. They want that thing to keep going. When they're below it, bears are now making money and bulls are underwater. So we and me and a lot of people use this as sentiment in oh my god, Rob's a savage. As sentiment in the market. And so when we're below it, I don't want to say you can just short rips because every bounce because we're below VWAP, but you should be more and more cautious looking to buy dips. As with all things, when we pull way away from them, it doesn't matter if it's an EMA or whatever it is. When we pull way away from him, it is very common to find your way back to it. We actually were, we were on QQQ today, but we actually were, you can see, we were buying this dip right here because we were setting higher lows and blah, blah. There's a bunch of reasons to be in there. So we were lucky enough to catch the spot. Were we below VWAP getting long? Absolutely. But VWAP was our main target. We aren't going to just be unrealistic and look for the rip past it. Did it happen today? Yeah, after an hour of like tight consolidation. We want that move to VWAP to capitalize on it. And so VWAP shows us where big money is positioned. It also will show us on range days, it's going to be a lot like an EMA. We're going to be flat. How I like to use VWAP, I make more use out of it on a range day than I ever would in EMA. When we get overextensions way past it and I know we're ranging, I will oftentimes buy these dips looking for the move to VWAP. If we're bouncing way up here, setting triple tops, I will very oftentimes short these rips with a target of VWAP. We know that algos have been happily buying to wind up at this average price. So we can assume that a lot of the time people are going, the algos and the market makers and the hedge funds are going to be very happy if the price ends up staying around VWAP because it's kind of a no win, no lose situation. It's just market grinding. It is when it's trending, it's oftentimes going to be the trend. Sellers were in control. We were shorting these rips. Did we have a couple attempts over VWAP? Yeah, never able to get over it. It will oftentimes be one of the strongest lines on your chart. It will oftentimes be the beginning of breakouts or breakdowns when you get below it. VWAP is really going to be that line in the sand because as we discussed, it's volume based on those algos. So when you have a day where say, bulls are making money and then we start to go below the VWAP, the bulls are going to start closing those longs and closing those longs because they understand that, based on the volume, we're starting to get below those average prices and the bears are trying to take control. Same as if you're short and we start to get over that VWAP, bears are going to start to cover and it can push the market a little bit. It works both ways. So VWAP to me is one of the most powerful ones that you can possibly use. Use it for market sentiment, use it for everything. So any questions there on VWAP? Okay, no questions there. So next one we're going to talk. So, okay, Ramsey, we're gonna kind of get into that, you know? So the next one that we're gonna talk, this is an EMA, but it's a specific EMA. I have a study for it. It's pinned in my tab, only for Thinkorswim, obviously. I'm sure that other people might have figured it out for, Webull and TradingView or whatever it is. But you can see multi-time frame moving average. So what are we looking for? When I do this, when you load it up, if you use this study, the default is going to be to length 50. That's as we discussed, 50 candles. We want to set it to 20. And we want to have the time frame set to 1 hour. So this is going to be the hourly 20 EMA. And we're going to put it on the chart. And when you put it on the chart, it's going to look, let me find more trendy of a day. So it's going to look funny. It's going to look stair-steppy like this. And the reason that it looks stair-steppy is because this is an hourly EMA being displayed on a 5-minute chart. So it only updates once an hour. So we get an update at the hour, and then we know this flat part and all of these candles is another hour. Here's our next update. So this is an hour on the chart. This to me is, I mean, I love VWAP. It would be very hard for me to pick between these two, but I'd have to say, gun to my head, one indicator. What am I using? Hourly 20. No questions asked. It is very often going to be the strongest line on your chart. It will very oftentimes lead to very volatile bounces or very volatile breakdowns. When it gives entries that provide a very tight stop. All of you guys know I trade with very tight stops, especially when you're scalping same days on SPY, you have to. It can oftentimes be that line in the sand, did we break over it? Yes, and instantly crushed under it. Broke over it, hourly 20 tries to be support. Yes, we have wicks under it, but they were doing everything to close above it. When we finally get a close under it, we finally see the sell. Same as get a close over it, we see a nice big rip. The hourly 20 is, I mean, it's insane. It is, like I said, one of the strongest lines you can have on your chart. It's an excellent trend indicator. It even works on range days. When you have a more rangy day, as we said, trade back to it. We break above it, short back down to it, short those highs back down to it. It is unstoppable. There's a few of us, we me, Sushi Joe, Raphael, a bunch of us, we all trade this all the time, and we all call it the cheat code. It is very, very strong. As I said, it will oftentimes be where your consolidation happens and the move comes after it. So it's awesome. I see a question about it. And you treat it as any other EMA. You take bounces up to it, you can short those bounces to it. You break above it, you buy dips down to it. It's just a much better EMA. The 9 EMA, it kind of sucks. It fails all the time. 9 times out of 10, it's going to push through the 9, hit the 20. The 20 is going to give you the better entry anyway, and that's on a 5-minute. The hourly 20 does not miss. It's a really it's one of the best things that you can use on your chart. So I see a person say, what does it look like on the hourly? Well, this is the other way you can use it. If you don't have Thinkorswim and you want to identify where that hourly 20 is, turn on a 20 EMA and go to the hourly chart. So that reminds me, I forgot to say something about VWAP. And it's just going to look like this. But on that 5-minute chart, it provides us a line for entries and exits and stop outs and all of that. So really, really good tool. So I'm gonna backtrack for just a second, because I did forget to mention one thing. So on VWAP, not Anchor VWAP. So on VWAP, it is, I'm going to say, unaffected by time frame. Is that true? Kind of. So, it doesn't matter if you're on your 5-minute chart. It doesn't matter if you're on your 15-minute chart. It doesn't matter if you're on your hourly chart. VWAP is always going to be the same price because it is based on volume. It is not based on time frame or anything like that. However, when you get out here to the daily and you look at your VWAP level, you can see it's 2 cents different because your daily time frames are not taking after hours movement into account. So the VWAP doesn't include those in it, or the VWAP doesn't include those in its calculations. Okay, so with that, we got our VWAP, we got our hourly 20. I'm trying to rush so we have a little bit of time at the end. So this, oh my God, I forgot about the inappropriate ones we have. So to me, oh wait, no, that's not it. That's not it. As I told you, and I'll share this study if anybody wants it. To me, hourly 20 and VWAP are the hands down most important levels on your charts as far as indicators and things like that. So when you guys see me post a chart, or when you guys see me share my screen of voice chat or anything, and you see this ribbon, well, here's my hourly 20, here's my VWAP. My buddy made this for me, so because we are trading below the VWAP, even though we're green on the day, it turns the VWAP red. When we're trading above it, it turns the VWAP green. So how do I use this? I mean, I buy dips at the hourly 20 and I look for moves to the VWAP. We break under VWAP, I look for retests and look for moves to the hourly 20. You, of course, I'm oversimplifying it here. You always have to look at levels and blah, 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 trends, all of that. But excellent for those moves. They happen frequently. When you take these shorts, you have a very tight stop. When you take these longs, you have a very tight stop. It also sets that bias for the day. If we are trading solidly, oh yeah, so choppy day. We're trading between them. We're basically spending our whole day between these two. This is a choppy day. When the breakout finally comes, you can try to catch that move. When the breakdown comes, you can try to catch that move. But as a whole, this is a choppy day. You go to another choppy day where we're just selling, buying right back into it, selling, going right back into it. Great things for choppy days to identify it. If they're just pointed sideways, like you can see right here, the hourly 20 didn't change for 2 hours because we were chopping. That value didn't change. When you get nice breakdown, VWAP crosses under hourly 20, look for shorts down to levels, look to short these bounces because it is identifying the bias for us. When we're pure buyer mode, obviously, as you get way overextended, you don't go chasing it. You're much safer buying dips down into here. But it does a very, very good job at showing you what the market is doing. Another one, here's the selling, break above it, break above the VWAP, break above the hourly 20, try to buy the dips, look for the move back up. You can see here, not like the 513 EMA, we didn't get the cross until the move had already happened, but we can look at this and say, okay, we're trading above VWAP. VWAP is moving towards the hourly 20. It likely gets above the hourly 20. And so we can start to have that bias. And this combo helps you identify it super well. So green shadow means that VWAP is above hourly 20. So obviously trending up. Red, VWAP is below hourly 20, where, when it's selling, obviously trending down. As it starts going up, market starts going up. So all that is showing you is VWAP's relation to the hourly 20. Or maybe I don't remember how he did it, but either hourly 20 relation to VWAP or VWAP to hourly 20, whatever it is, same, but is it above or below? So does everybody get that? And then again, this to me, gun to my head, I'm probably going hourly 20 on its own if I have to. If I got two, you're looking at it. No questions asked. You can find trades based on these indicators, couple them with your support and resistance every single day. Even today's a great example. You buy the hourly 20 dip, you're in here at 553.20, whatever it is, 30. Worst case, your stop's down here, 552.80, if that breakdown really comes. So you got about 50 cents of risk. And then you got $2 up to VWAP. So you got a 1 risk 4 reward trade. I'll take that every single time. It's not always going to be a straight line up there. Sometimes you're going to get stopped out. You obviously have to trim along the way, but really, really good tools to make identifying what's going on the charts easy. So any questions there? And then we'll do last one. Yeah, we make a lot of jokes about just free money and the cheat code, and turn those things on. I highly recommend it. So if you want to add the hourly 20, if you don't have my study and you don't know how to do that, feel free to just shoot me a DM and we can get you lined out. Okay, and so last indicator set we're talking about is yeah, the hourly 20 is just insane. Insane, Ramsey. It really is. I mean, it's one of the to me, it's like one of the most powerful things you could ever find in trading. Shout out Al Brooks, as always, for all good things. So, very last one we're gonna talk is B bands, Bollinger bands. Honestly, when I run these, you guys can see like for my saved study, I have VWAP accompanying it, but these are Bollinger bands. They are not something I use every day. They are not something that I mean, I put weight in them, but there's very, very specific times that I care about them. And um yeah, the boiler bands. God, I love you, Narvin, dude. You're just a killer. So, what are they? What are they showing us? They are showing us standard deviations from this midline. This midline also happens to be a 20 simple moving average. So, they're showing us deviations from a midline. And what do these deviations show us and what do they mean? Well, they show us how overextended are we and how much momentum do we have? So when you look at these, if you just pull up Bollinger Bands, yours are going to look a little bit different because I'm actually running two sets of them. So when you pull them up, you're going to see a number. It's going to be -2 and +2. You can edit those. And so I run one that's -2, +2, obviously minus, two negative deviations down or two positive deviations up. Well, I also run a third. Why do I run both sets of them? Because of the statistics attached to them. So today's one of the funny days, and I was like, it of course cracked me up when I was knowing I was teaching about Bollinger Bands tonight. When you are outside of the second standard deviation Bollinger Band, and this isn't so Bollinger, these are named after a guy, he altered the math a little bit. So this isn't your standard, your normal standard deviation bell where everything's very specific. He edited the math a little bit to put in a bit of emphasis on price action and volatility. So the math is slightly different. However, what they show us is when we are outside of the two standard deviation band, you're sitting between an 85 to 90% chance that whatever data you're looking at, in our case, candles, that it won't stay there. When you get outside of the third standard deviation band, you're talking 95 to 99% chance that we don't stay there. So today, of course, on the day I teach about it, is one of those hilarious days where it absolutely blows out the statistics. You have a 90% chance that data won't close outside of this second band. And basically, I mean, for all intents and purposes, a 99% chance that it won't stay outside of this third band. Well, it stayed outside of the third band 2 candles in a row. It stayed outside of the second band 4 candles in a row. This is a great example of where they can hurt you. Because the normal rule of thumb is when you push into these standard deviation bands, you understand the Bollinger Bands are expanding. That means momentum is going in a certain direction. So they are showing us that momentum is up. Well, a lot of people think when they see this third band, oh, short it because there's a 99% chance it will come back. Does that work? You can see if you shorted the close of this candle, you got yourself like a 30-cent pullback. There was a couple bucks to be made, but you are fighting strong momentum. Many times when they're expanding like this, going vertical, you want to look for these pullbacks to actually attempt to buy them when we're spending this time outside of here. Then when we finally get outside of it, you start to be cautious because you say, okay, momentum is slowing down, bands are still expanding, but market's going sideways. We start to consider shorts here, big level, and what is technically speaking, strong resistance. So these are showing us overextension. It can get very dramatic. I don't use these all the time for this reason. Sometimes they're going to show you momentum. Sometimes they're going to bottom tick for you. Sometimes you get the little blowout and you get the nice little pullback. I like to use these early in the day when something is going insane. Like it's ripping more, like you no sense to it. So one of them off the top of my head was Apple. So Apple a couple days ago, you can see here, we know that theoretically, according to the math, 90% chance we won't blow out or we won't stay outside of the second band. 99% chance we won't stay outside of the third band. So I don't even know where this is. This is sixth band, sixth deviation. I mean, you were talking like 0.000001 chance that this thing stays here. I will take this type of short every single time when we have massive blowouts from them and you aren't looking for a reversal. Did this one end up being a great reversal? Absolutely. Uh, you know, but you're looking for a move back to those bands because statistically you are going to get it. So I love to see these kinds of things. Blowout, nice bounce, blow down into the Bollinger Bands and set a double bottom. We not only have a double bottom, we now have statistics on our side that say probabilities are if we buy this dip down here at this band and we have a stop below here, we have a very high probability of a bounce. Is it always going to reverse and run up to the top side? No, but we know we have a double bottom, probably had some support and resistance somewhere around here. We have many things in our favor. Then we get to use a statistical indicator to show us where the bounce could come. So this is how I like to use them. So when is, you might ask yourself, well, how do you catch these? I personally have a chart that I do always have Bollinger Bands up on. As I mentioned, they're hideous. I hate looking at them all day. They make a chart super messy, and so I don't like to look at Bollinger Bands all day. So I have a little chart that I dedicate to them if things are getting overextended or whatever it is. I mean, even Apple this morning, I wish I would have seen this one. I still would have taken this short here, knowing that my stop was 211.12. I had 30 cents of risk. Unfortunately, I bought the dip down here, scalped it for like 10% and then got stopped out. And then you can see here's a nice failure where it just crushes through it on that news, crushes down through it. Reasonable enough short with a nice tight stop. So when is the most common time I use these? And this is like, maybe this isn't the best thing to teach in like a lecture or whatever it is. Fridays. Friday morning, explosion outside of a B band, one down or up. I don't care. I'll buy dips when they blow them out to you. I'll short rips when they blow them out to you. It is one of the highest risk, highest reward, most fun trades you can catch is a Bollinger Band explosion on a Friday right off the open. I love trading things like Mara, things like that on Fridays. Look for these just massive overextensions. Try to buy those things for bounces early in the day. Find that volatility real early where you're just blowing out. You close out. I mean, God, you close once outside of the third band, do it again. You start to look for shorts here. It's extremely high risk because you're oftentimes shorting, you're shorting extreme strength or you're longing extreme weakness. But very, very oftentimes, and this, a little more advanced than we're going to get into, very, very oftentimes when you get the big blowout candle on the Bollinger Band, it is the exhaustion signal. It is buyers doing their last final buy to rip it, or it's sellers doing the one final dump before they're going to start covering. Yeah, Hims, great one. I actually saw this one, was this yesterday or 2 days ago? I saw Hims do this one. Any of these very volatile names, Bollinger Bands can be a very wonderful tool. Even, intraday, as they start to get tight, they'll start to show you a range early. You can buy the dips down here, buy the dip, stop under the bands. Obviously, you can never just use an indicator. I'm going to keep emphasizing that. You can never just use an indicator, but when you have statistics on your side, you guys know I teach market statistics all the time. When I have statistics on my side, it is for me a big check mark in the, like confirmation boxes for me. So any questions on Bollinger Bands? There's something that getting the hang of them takes a long time, or not a long time, but takes some effort. You have to be willing to short, and not necessarily, but short some rippers, buy some absolute knives, and that's where Bollinger Bands can be very, very powerful. I could do a whole lecture on the ins and outs of the different ways you can use these intraday, but I just wanted to show you guys a fun way, high risk way to use them, because it can be super rewarding. It can be a really, really good trade. It can be a horrible trade too. You're trading same day Fridays, going against extreme momentum in the market. It can be a death wish, but it can also work pretty dang good. So my settings on these, I run two sets of them. So I have a set of -2 +2, and I have a set of -3 +3. And you want those extensions outside of the third. If you want to catch that extreme volatility, you want to look for the big booms outside of the third. I think actually, so this coin one today, you know, this was a beauty. Obviously, I didn't catch it, but somebody brought up coin today and I happened to notice it on the B bands. Beautiful push down right here. You even get a couple nice reversal candles off of those V bands. There's reasons to be looking long here. Oh yeah, so I mentioned yeah, and thanks for bringing that up because I will share that. So uh we get this question a lot and great time to talk about it. How do you identify levels at all-time highs? Um, the standard answer is fibs, run your swing high to swing low, run an extension, or you can even run, additional percentages on retracements, the other way. But run your swing high, swing lows. Fibs is a really common one. One that I like is Bollinger Bands. I mean, they're going to be moving every day, so you're going to kind of gradually see these numbers, but these are pretty reasonable targets for the S&P to go to. Momentum's going up, buying's there. We've had some closes outside of it, so you want to be careful, but you get that pullback and you start looking for more upside. So it's a nice, simple way to identify some levels that are going to kind of shift every day. We even saw it on these days when we were pushing up into them, we were kind of stopping. That's where we were really faltering. So they can be a really, really great way to quickly identify yourself a couple of levels to the upside. I will also say when you get massive extensions on bands on the daily, it is worth it to sneak in there. When you're really seeing, because it takes a lot. It's not common. Obviously, we've had crazy volatility lately, but you start to have some blowouts on bands, and it starts to be a pretty dang good time to maybe consider a bit of a dip buy. They will very oftentimes the overextensions, especially outside of those thirds on the daily, will give you some amount of retrace, either up or down, but you can see it's not a common occurrence. I mean, here's one we got outside of it. Here's one we got outside of it, but bought it same day. It's not a common thing by any means, but oftentimes when it happens, you get an explosive move. And even more so on the weekly, blowing out a third standard deviation band on the weekly. You can see like it took the Japan carry trade unwind. It took the absolutely terrible economic policy that is tariffs to make it happen. It doesn't happen often. When it does, it will provide an explosion almost always. Okay, and so with that, that's all I got. Any more questions about B bands? Otherwise, we got 15 minutes or so for some questions, charting. I know Norvin's got a whole list,
I was
but
gonna say we got 15 minutes. Norvin, go.
yeah, but I would love it if somebody besides Norvin would chime in. Wow, did Norvin really try to tell me to check AES after he told me last week it was like a shit stock? Yeah, we'll talk. Yeah, we will look at that, Norvin. I think it was right around here. He said, "Nah, River Boy, that one's going down." Okay, well, if there is no questions, it's the Norvin hour, I suppose. Uh, how do I feel about RSI? So RSI is something, and I'm sorry if I'm hurting anybody's feelings. You could not pay me to put RSI on my chart. It is, God, speaking of B bands, look at AES. I joke, this is a joke. Nobody take offense to this. I call RSI the really stupid indicator. If you should never need an indicator to tell you that they have bought something a lot. You should never need an indicator to tell you that they have sold something a lot. Why I like a B-band much more for overextension, it gives you a place on the chart to care about. RSI just doesn't do it for me. I mean, we had people, that people traded, it's my favorite one to talk about. Let's see. So basically this entire parabolic move on Nvidia, people would not stop talking, and for hundreds of dollars. I mean, this is post split, but for hundreds of dollars, people discussed it's a six hidden bearish divergence on RSI as they lost everything as Nvidia went on the run of a lifetime. RSI has no place on my charts. It's not something that I've ever seen helpful. It is not something that I've ever seen help other people. There is one guy, I love him. I think he's a great trader. He's turning into, I think he's falling apart, unfortunately. He uses RSI, but it is just not something that for me, I've never found use for. And in fact, I've just seen it hurt people. They'll start, oh, we're in overbought conditions. And overbought, I just think is terrible terminology because yeah, maybe RSI is over 70 because everybody is buying and it has extreme strength. That does not mean you should be looking for a pullback. It's just telling you everybody's buying. So I think how people use it is wrong, and the right way to use it is it's just useless. You don't need it. There's more effective ways. Now, my normal disclaimer. If it works for you, use it. Just because I don't like it and because I talk bad about it doesn't mean anything. Use what works for you. SMCI. Yeah.
Yo, River, can you check Citibank?
Oh, there's Norbin. Yeah, SMCI. So I actually got asked about this in voice chat today, so I have it pulled up. It closed over 50, but I'll tell you what, me personally, I ain't long here. This is a chase. It's a chase that worked. I won't deny that. If you were buying anything up here at 49.50, yep, Crashness, we'll catch you tomorrow. Or no, we'll catch you next week, but we'll catch you soon. If you're buying in here up 49.50, I don't care. You're chasing. That's fine because it worked this time. Most of the time, it's going to fail you. You need to look at SMCI as very tight range. Does this breakout come? Maybe it pushes up there to that 50.63. I do think when you zoom out a little bit, let's see, when you zoom out a little bit and you start to look at this 50.63 zone, you start to say to yourself, this is likely a very bad time to be getting long. We get these dips down here to the bottom of the range and great. But I will never buy something like this because 80% of breakouts fail statistically. So to me, this hasn't had enough attempts. Also, you get long here, your stop realistically needs to be down here. And so I look at this as if you're getting long at 49 and your stop needs to be basically below 46, 45 area, you're risking $3 or $4 of downside. Then when I zoom out and look at the charts, I start to say, okay, this 50.63 is the strongest level on the chart. So I got a $1.50 of upside for $3 worth of risk. It's bad risk reward here. You tell me you're buying SMCI at the bottom of this range at 46, I'm hopping in there with you. But if I was, for me, if I was long SMCI, I'm for the most part out of the entire position today on that really nice push up. That's just me. Today people asked about it today, and I was like, oh, it's likely going to go to that 50 top of the range, and we had to try a little breakout, break back down in, very tiny close above it. I'll be curious to see how it goes, but this is one of those ones where for me, I want to buy the dip, or I want to wait until the breakout confirms over 50.63 and I want to buy that first pullback, and then start to look for some upside. Well, I am bearish on SMCI because they still haven't provided the paperwork they need to. But when we got big, strong ranges like this, I'm just not the type of person to get long at tops of ranges. I've traded for long enough to know that that's kind of a losing method. And so that's just me, I like safety because if I get long up here and I have my $3 risk, I don't like that. If I get long down here and I have like cents risk, you know, I mean, I got like what, 50 cents risk and very best case scenario, $4 upside. So, I mean, I'm basically looking at a 1 risk, 10 reward trade there. Whereas the chase up here is giving you the 3 risk, 1 reward trade. So that's just me. You know, a lot of people when they're newer to trading, you know, when they've been trading, you know, 3, 4, 5 years, whatever it is, they're they think of themselves as breakout traders. They want to be breakout traders, and they always think they're catching the next breakout. But what they don't ever take into consideration is how often their trades go. Yep, Red on Ramsey, we'll catch you later. How often their trades go, you know, 20-30% red, then the breakout comes. That's why as you start to learn more and more about options, you'll start to realize waiting for pullbacks and potentially missing trades 9 times out of 10 makes you more money in the long run. Do I use fibs? Yes and no. Definitely not intraday. Are they fine? Can they show you some retraces and stuff like that? For sure. You know, I know obviously Flips used to talk about them all the time. He didn't actually use them, in my experience. You know, rarely were they actually on his chart. I know Nando uses them some. I don't actually know how he uses them if it's intraday. I know he spends a lot of time on those like, you know, 2-week hourly charts. And so he might be using the fibs on there. For me, if I'm using fibs, daily timeframes, I just want to know the big stuff. You know, that's what matters to me when it comes to fibs. I put more faith in my levels than I put in fibs. Will I take note of, you know, a 50% pullback or a 50% retrace? Yes, but it's not going to do much for my trade plan personally. However, I like fibs a lot. I think they are great. They just aren't something um they aren't something that I use frequently. You might even seen it, I think it was on my Oh, I probably just cleared it though. Yeah, I did just clear it. It's not uncommon for me. Like if I pull up, you can see daily chart here. Obviously, you know, we had, I mean, the retrace of a lifetime turned into craziness, you know. But definitely didn't expect that much. If I'm using fibs, they're almost always going to be on that daily time frame. Citibank, Norbin, been asking all about it. Wow. Oh yeah, you asked me about this already. Didn't you ask me about this just a few days ago? And I told you buy dips to that 84, 85 zone. You know,
I don't recall, but yeah, I'm looking at this name and Tilio's been talking about it a lot and he's super bullish on it. Obviously I didn't want to buy that mega top.
well, yeah, but Tilio was saying buy at 72, 73. You know, when you were telling us it was the end of financials as they were turning around and making their like headlong run to new all-time highs, and everybody was printing long financials. You know, yes, I'm sure he's still bullish on City, but you know, if you're gonna enter it, you're gonna be chasing him. He was talking about this 2 weeks ago, you know. Uh uh sorry, I just got a DM. If you're gonna try to buy this dip, I'm sticking by what I said. You know, I have this level on there. I'm assuming for you or somebody in the last few days, a dip back to this 84, 85 zone with stops under 84 is how I would be trading City if I was going to be looking at it. As me and Tilly have both been saying, financials is an easy long. It's an easy sector to be long on. You should very likely remain long on financials. We've been preaching that since last November. Both of us have. It's definitely been very rewarding. Obviously, you know, March into April was bad for every single sector in the market. But financials have been and will continue to be that leader. I gotta believe myself. So you're looking in the right place, Norvin. You know where I wanna be long is really this 84, and then looking for those spots back to 88, 83, something like that. Even another one.
What about SoFi?
Oh yeah, but that thing's long gone. So this is the one that I was actually looking at today. And somebody was asking me about it. JPM, right off this 280, beauty. And Lot more deltas available to that upside on JPM. I know the contracts are a little bit more expensive, but see how these earnings, I mean, you could honestly probably be getting long for that earnings run up next week, or see how these earnings go. If we can get a nice little buyable dip down to maybe that 270, 265 area, on those earnings, great, I'll be in there. But JPM looking real good.
Yeah, honestly, that's the main reason I kind of want to play Citibank. It also has earnings next week.
Yep.
Obviously, we all know earnings could go 50-50, but I mean, I'm really convinced you guys have obviously more experience, and I really like this pullback on these financial names.
Yep, and yeah, and let them pull back a little bit more. Trend is still strong up on everything in the market. Nice little pullbacks are great, but take some of the, look for those dips to buy. We want those dips to buy when everything's been absolutely parabolic. We're seeing this nice sell on the back of that dividend date. I mean, if they can get me down to 270, I might even be long into earnings if they give me enough time, Well, I guess I'll be gone until next Monday, so they probably won't give me enough time, but better dip to get long into earnings. I mean, you have to stay bullish on JP Morgan, in my opinion. And like, look at this thing, like betting against JP Morgan, other than, that like March, April stuff this year. Betting against JP Morgan has been a death wish for a long time, so it's a great one. It's a great one. And then SoFi, obviously, Nando hammered that one $10 or whatever they got in there at.
Yeah, that was
This
a
was the beauty of the dip. At this point, I mean, you're just in such chase mode here. I mean, like 2060, horrible spot to get long. If we get above it, then yeah, you basically have to go look for this, double top over here at 24, and then ideally we'll eventually run it back to those all-time highs. See if earnings end of the month. But man, God, even look at those weekly bands. I would love a pullback. I would start to look for that pullback down to maybe $18 to try to get in there. 18, $17 is where I'd be trying. But for now, that's the chase of a lifetime.
Yeah, I'm actually buying this. I opened up a SoFi banking account, and every time I get paid, I just be buying it.
I mean, it's something that, don't get me wrong, back here, when this was my joke, I drew these lines ahead of time, and this is what I wanted. I wanted the pump because they had absolutely horrible financials. And then I said, short this thing. And this is my joke. You can see where my arrow was, and we didn't quite get it, but we got within 20 cents. And that was my joke. That's the pump phase. And here's the dump phase of the pump and dump. And we got exactly what we wanted. Then they completely switched up their financials and everything started going so much better. And we got the ripper. Avenger, yes, thank you. Thank you for bringing that up. I just saw your message. Are you talking on the daily? Yeah. Man, I'll tell you what, I've been trying to catch this apple and I'm bummed I didn't swing. Did you catch those apples with me in premium today? These things are up like 80%. Yes, I think once back to that 213. We'll see. No guarantees. That was my target. Unfortunately, going out of town tomorrow. It wants back to that 213. Apple, I have been preaching hammer Apple at 195 any chance you get for the better part of 2.5 months now. And then once we were holding around 200, hammer Apple at 200. I've been preaching it. I unfortunately was in at the beginning of this move and sold it way too early. But yep, I think that's a great target. Happens to line up with a nice solid level. So anywhere up in that 213, 214 area seems pretty dang reasonable to me.
Yo, River, what's going on with CLS, man? It just keeps on ripping, yo.
Oh yeah, I don't know anything about this. I don't know. It's all popular on Instagram right now, but I don't know anything about them.
Oh, really? It's popular now?
Yeah. I mean, yeah, they pulled the Norvin, dude. That's what IG and that's what Furus do. They're like, oh, look at this thing. It's ripped 183% since April lows. We should buy it here, They take the Norvin trade.
Classic.
Yeah, classic Norvin, dude. Yeah.
EST too. It's about to hit 200 pretty soon.
Yeah, that one's sick. That one's sick. What about VRT, dude? You never talk about your old tried and true VRT anymore, dude. What's up?
Yo, listen, River. I did some
Look
research
at
on
dude,
VRT.
No, yeah, look at VRT. Look at my levels that I have on here. banger stock entry or banger stock river entry for Gutter Boy. That's you. Look at where I told you to buy VRT. Look at where our target was. Target for Gutter Boy. 150
No
from
way.
51, dude. I gave you the 200% Gutter Boy and you did nothing about it.
Yeah. Yeah.
Okay, well, with that, I'm going to call it. Thank you, everybody, so much. If you got any questions about any of this, just shoot me a message. Very good chance I won't get back to you until next week. But you guys have a great rest of your week. Trade safe, and we will talk to you all soon. Thank you.
Yo, River, can I tell you something before you leave?
Yo, what's up, Marvin?
So, fun fact about VRT,
Uh-huh.
they're gonna be the suppliers for the liquid cooling for the Stargate project, bro.
Damn, that's actually pretty dang cool, Marvin. That's actually a cool fact, dude. I like that. Wow, I'm going to look into that. Okay, right on, guys. Have a good one. We will catch you all later. Thanks for joining. Yep, really appreciate all you for always being here. Nice little turnout in the end. So thanks, everybody. We'll talk to you soon.